Hi, everyone. So welcome to this event. The theme of the event is entrepreneurship in times of crisis. And today we'll be joined by, we're already joined by leading investors who will be sharing some guidance on how local entrepreneurs can adapt and thrive in a crisis situation. I'm so excited to have everyone on this call, especially because I think that all of their portfolios combined represent the most successful companies across all growth stages in this ecosystem. So I know that they have really, really interesting perspective on this subject. And I think that that perspective will be helpful for a lot of us here today. Just quickly run through the agenda. We're going to keep things very, very straightforward and focus more time on the conversations. But we'll just spend the next 5 minutes. I'll just talk briefly about Utopia, what we do, and then we'll spend most of the time on the actual panel, right? But for some quick housekeeping, you can ask questions. Some of you have sent questions already, which we might be able to take some of them, but you can ask questions directly using the Q&A menu in your app. And then if there are interesting quotes, if there are interesting updates, if there are images you want to share on social media, do that. And then our team or our handles on social media will be sharing some of them throughout the day. Please also note that this event is being recorded. Some quick updates about what Utopia is or what is Utopia. We're really just think of us as an innovation group for the urban ecosystem, especially in emerging cities. So data shows that Africa, Latin America, Asia, over the coming decades, are going to be cities across all of those different regions are going to be really important just because of their growth rate, because of what that's happening. But there's no one that's specifically focused in supporting urban entrepreneurs in those regions. So our goal is to create a network of city labs across Asia, Latin America, and across Africa, basically to help build the urban ecosystems. The reality is that at least, there are a lot of interesting statistics in Africa alone. I think actually globally, over 60% of people are going to be living in cities over the coming decades. And 90% of the growth in city population over the next 30 years will happen in Africa, right? And then the rest is going to happen in emerging cities across Asia and Latin America. Actually, by the end of this century, of the top 20 megacities in the world, none of them will be in America, none of them will be in Europe, right? But there's no one that's specifically supporting innovators and entrepreneurs who are helping to shape the emergence of these cities. So city labs are venture studios for emerging entrepreneurs and urban entrepreneurs. And we think of it in two ways. One is as a company builder, but also as a fund, right? And for us, it's also important to be able to draw a lot of funding into that space because we know that this is going to be an important sector over the coming decades, right? And a lot of work needs to be done in that area. And this is just some of the statistics that I quoted earlier. 2.5 billion people over the next 30 years will move into cities, right? Lagos by the end of this century would have 88 million people. I mean, whenever I think about that, it just blows my mind. But it's the truth, right? And we have to start doing work to prepare towards that. So these are just some interesting urban innovations across the world and an idea of what some of the things that we're going to be seeing over the coming years and supporting over the coming years. And this just sort of shows what our timelines are for this year. So many of you probably know that we launched an Urban Innovation Challenge last week, actually, and you should check that out at urbanchallenge.co. Applications are open till the end of May. And really the idea is to find entrepreneurs who are shaping the future of Lagos or shaping the Lagos of tomorrow. We do plan to have a summit later in the year. I mean, some of this might change because of all that's happening, but our goal is to also launch a city lab in Lagos by the end of H1, and then tie that to a pilot for our mega city fund. From then on, we want to scale that Africa-wide, and then scale that to a full-blown Africa mega city fund this year. There's more to come, and like this just sort of lays the background or the groundwork for a lot of the work that we want to do in the future. And this is just how our team is distributed right now. We have partners in Rio, in Brazil, in Kathmandu, in Nepal, and then we have a mothership based in Silicon Valley. And yeah, and for us, the simple question we ask in everything that we do is simply like, will this make the city better for the many, not just the few? And I think that includes those in the formal and informal sector. A lot of the times we treat like informal settlements, for instance, as bugs in like the megacity concept, especially across Africa. But it's important to ask that who are those building solutions that make life better for everyone within cities? And that's the question that we ask. If there are any questions, please feel free to reach out to us at lagos@utopia.do. So very quickly, we're going to move into the panel. Like I said earlier, I'm very excited to have everyone on this call. So we have Aboyeji, who's the co-founder and general partner at Future Africa. We have Tosin Oni, who's the principal investments and portfolio management at EchoVC. Eloho, Omame, or Gihan-Mbelu, who's the managing director and CEO for Endeavor Nigeria. Kola, who's the founding partner of Ventures Platform, and myself, I'll be moderating today's conversation. With that said, I'm going to stop sharing my screen and invite Eloho, I guess, to give some opening remarks.
Okay. Well, thanks, Emmanuel. Thanks for that. Thank you, Emmanuel. Thanks for that introduction. It was really actually quite interesting and quite exciting to hear you talk about the work that Utopia is trying to do in Lagos and other sort of urban ecosystems. I'm quite excited to see what you guys grow into. And I think on the back of that, the whole conversation around entrepreneurship in crisis and the opportunities that the current crisis potentially throws up, I think is a really engaging and interesting one to have. So I'm really happy to be part of this. So I'm, as you said, managing director of Endeavor here in Nigeria. We're part of a global organization. We're in 38 markets or so, launched about 20 years ago initially, 2 years ago in Nigeria, or 18 months ago in Nigeria. Our objective, we sort of have two parts, or we wear two hats. On the one hand, we're an entrepreneurship support organization, but we focus on entrepreneurs and scale-up stage companies. So not quite growth stage in that, the growth profile, the growth ramp-up is still there, but certainly, they've passed that initial startup phase. And so the challenges that the entrepreneurs are facing are a little bit different. They are things like, how do I launch, my third or fourth product into my second market, for example? How do I extend into Latin America? How do I, in this sort of new phase of maturity of my team, how do I think about the ways in which I as a personal leader need to think about managing an organization of 200-300 people, etc. We launched in Nigeria, like I said, 18 months ago. Our goal is really to support underserved ecosystems. So primarily we're in Africa, Sub-Saharan Africa, Middle East, North Africa, Latin America, and those are sort of some of our strongest hubs. On the investment side, Endeavor Catalyst in the last 2 to 3 years has become, or is increasingly becoming, one of the more prolific investors in Sub-Saharan Africa as well. Our footprint is a little bit more established from an investment standpoint in Kenya. So we're invested in Twiga Foods and Cellulant and all of those guys. Also, Soko Watch, etc. Sorry, Copia rather, not Soko Watch. And then in Nigeria, we're invested in Flutterwave. And the way that we invest is we select the companies into our network, and then we effectively give them a call option on capital. One of our goals is to make sure that Endeavor entrepreneurs, who we believe are at the forefront of leading innovation within their ecosystems, one of our goals is to make sure that they have access to what we call frictionless capital. So aside from our own capital, we then help them raise additional capital outside of Endeavor. There's a bunch of other things we do across talent, market entry, etc. But really fundamentally, it's about helping scale-up stage companies grow their companies and accelerate their impact much faster in some of these underserved ecosystems.
Nice, thanks. We'll come into the article you published yesterday. Sorry, 2 days ago. I thought that was very interesting. But let me introduce Tosin. Please, can you tell us a bit about EchoVC and some of the interesting stuff you guys?
Okay, thanks Emmanuel for this. Thanks for inviting me. It's a pleasure to participate in this and to support the work that you're doing, particularly in the context of growing ecosystem in Nigeria and in Africa, which is our remit. So EchoVC, we're seed and early stage investors in tech and tech-enabled businesses focused on African markets. What does that mean? So focused on African markets means we're focused on businesses that serve African consumers that have products for Africans. So you can be a company in any of the countries in Africa with a product or a solution, or you could be sitting at, and this is not just incorporation, you could be sitting and operating from London, from Boston, where we actually have made some investments with products that serve African customers and markets. We invest from seed all the way to seed and early stage from our fund, and out of a partnership with TPG Growth, whose small check platform we manage in Africa. We also invest in early growth. So this allows us to invest from writing checks from 100K all the way to $10 million, which we have done. So yeah, that's us. We're sector agnostic. Sector agnostic we're not claiming to be experts in every sector, but the problems and solutions that Africa needs are in a whole breadth of sectors, and we're willing and regularly take a look at a whole host of sectors, from healthcare to IoT to fintech, you name it, to logistics. We've looked at it and have made investments in these sectors.
Nice. I know EchoVC is an interesting philosophy around, like, I think I also described it as like spotting the corner or something. I can't remember the exact word he used, but we'll get into that in a second. Kola, who is the founding partner at Ventures Platform.
Sure, Emmanuel, thank you. It's a pleasure to be on this call with my friends, Eloho, Tosin, and E, as well as Emmanuel. Thanks for having me on. I'm sorry my video can't come on because my bandwidth is experiencing a lockdown. Let's put it that way. But I hope my voice will pass. I lead the team at Ventures Platform as the founding partner. At Ventures, we like to think of ourselves as a early stage discovery fund because we essentially look to identify and support high potential entrepreneurs at their earliest stage of development. And so we tend to take the early bets and are most excited when we can be the first or second investor in the companies we support. Over the last few years, we've been quite prolific across a number of verticals. And I guess the common thread for us is we're very keen on backing folks that are building companies or solutions that tackle tackle non-consumption head-on, serve mass markets and the large youth population. Because we find that this represents the largest segment of need in the continent. We also have a very clear philosophy around building the first few layers of a digital economy. So for a few years now, we've held that we've held the belief that Africa perhaps wasn't completely ripe for full-on e-commerce, but there are certain layers that needed to be built before that, and so we've supported companies in that segment. We tend to be quite hands-on with the companies we back in terms of helping them raise their follow-on rounds, because we invest from pre-seed all the way to seed rounds. And so, we're happy to be here. We've been quite active supporting our portfolio companies and the ecosystem in general in dealing with this crisis. We also recently launched COVID Innovation Challenge that has gone really well. And I think from next week, a number of the innovations in that challenge are going to announce rollouts of their platforms with the NCDC and other agencies. So it's really been a great pleasure to sort of galvanize the power of our ecosystem and the resources we have towards this immediate challenge that we face. And we're glad to have the support of Eloho and her team and E on this call as well on that challenge. So it's good to be here, and hopefully we can learn and share together. Thank you very much.
And last but not least, Aboyeji, who's the co-founder and general partner at
Hi, my name is E. Thank you for having me on the call, Emmanuel. Can you hear me?
Yeah, sure.
Am I clear? Okay, awesome. So yeah, my name is E. I'm the general partner and co-founder at Future Africa. The complete name is the Fund for Africa's Future. We are a community of innovators who believe that an African future is possible, and that we need to steer it in the direction of being a future where prosperity and purpose is within everyone's reach. We believe that the best way to do this is to partner with innovators who are turning our biggest challenges into global business opportunities. That we also have a responsibility to support these innovators with capital and coaching, which is what informs our approach to supporting innovators. A lot of our experience really comes from our own personal journey as entrepreneurs. As many of you know, the team has been part of quite a number of successful African technology stories, including Andela, Flutterwave, Jumia, and many others. And what we try to do with our approach is really provide capital, so typically $50,000 in companies that are valued between $500,000 and $5 million. And we typically provide that in chunks of 30 to, we typically provide that as convertible debt notes or safe notes or equity. Typically we're the first check in most of the companies that we back. And we support our entrepreneurs very actively through our coaching program, where we help them with their fundraising decks. We actually provide them with sales support and business development support through our community partners, who are usually large enterprises. We also provide concierge services, so everything from getting your taxes filed to managing HR, all through the platform. We've been around for quite a while, actually. We've been around for 5 years, since 2015, although we were running part-time for most of that time. Since we started, we've invested $1.5 million of our own money across 19 companies in the portfolio. And we've had quite a number of very big wins, including Kobo 360, 54 Gene, Max, and a couple others. We've grown our portfolio 8 times in the last 5 years, $12 million in assets. And our companies, the companies in our portfolio represent $1.2 billion of company value and have raised $300 million in follow-on financing. They've made about $120 million in revenue, created about 3,000 direct jobs in Nigeria. We're raising our sights over the next 10 years to grow the value of the companies under our management to over $100 billion. And we're looking to help them raise $1 billion in follow-on capital and get to $300 million in revenue and create at least 10,000 direct jobs. We just recently launched a product which kind of bypasses traditional venture capital because we think it's not the right model for the continent, where we basically democratize our deal flow to anybody who wants to participate with us in investing in innovators. We typically charge a membership fee, annual membership fee of $1,000 to join our co-investment club. And then we provide you deal flow via AngelList, so that people can, access our deal flow and invest directly into companies via AngelList. So yeah.
Talk a bit about that democratic structure very soon in relation to fundraising later on. And I think that's interesting. I think I want to start this conversation. And by the way, everyone on the call, if you do have a question, please feel free to use the Q&A just again. I'll talk about like a number of things from surviving, thriving, fundraising, to maybe even communication, and like how to manage yourself as well during this period, as much as you can get to. But I wanted to start with Eloho, especially because you published this article 2 days ago. Like, what's the scale of what we're dealing with here? And help us contextualize what's happening now.
So I think what I would say is that in terms of scale and what's to come, it's important that we brace ourselves in very many ways. I'm still trying to sort of get a handle on a consensus view ultimately on what sort of the broader macro picture looks like. I think there's lots of different views. There's the IMF so far, there's the McKinsey report that says that 150 million jobs are at risk. There's all kinds of information, right? I think, and interestingly, this morning I woke up and I read there was an FT diary article by the finance minister in Ghana, where he was saying that they're sort of bracing themselves for a sharp drop, and then for 2 to 3 years, sharp drop, and then 2 to 3 years of continued decline before the economy starts to revive again. I've also seen some stats, I think it was in Disrupt Africa, that quoted Mr. Tomi Davis saying that he reckons that 80% of startups in our ecosystem today probably will not survive this crisis, right? But at the same time, I think rather than be a voice of doom and gloom, I sort of, my mindset around what's going on, in as much as the outlook is not desperately encouraging, is that, what a lucky place to be, right, in terms of being in an ecosystem that has already sort of shown quite a lot of momentum around rallying around the founders in different ways. And also looking at this crisis and looking at the ways in which it is changing the ways that people have to live and work, and thinking about the opportunities that creates. Interestingly, for example, Kola mentioned e-commerce and his theory, which has been evolving for a few years, around why that never made sense at the time that there was lots of investment in it, and why the venture startup has been investing in developing the infrastructure around it. And one of my theses is actually that perhaps this entire sort of social distancing culture that we're going to have to imbibe over the next 18 months or so is what then creates the catalyst that jumpstarts a much more digital future for us in Africa. So the outlook from my perspective isn't great. That outlook is not, interestingly, or as you might imagine, is not different from the outlook that we're seeing from our colleagues in Latin America and all of these other parts of the world, right? There are companies in our global endeavor portfolio whose revenues are down to zero. There are companies that have had to shut down. Layoffs are happening everywhere. But I think that almost is something that there's only so much we can do to manage those kinds of things. I think it's really exciting to be part of conversations that say, well, what opportunities is a crisis like this potentially throwing up?
Yeah, thanks. That's great. We'll get into the conversation about like what can be done in a second, but I wanted to ask Tosin, I'm curious to know what sort of guidance, and as much as you can share, right, did you like provide to your own portfolio companies? I know like you have a wide range of portfolio companies cut across sub-Saharan Africa. How did you like, what sort of guidance are you providing to them during this period, and how are they responding to all of this?
Right. Okay. I think for us, the starting place is kind of akin to what Eloho was talking about. I've heard someone describe a crisis like this as we're in an elevator going down, but we don't know what level it's going to stop at. And that's what we're telling our founders. Is like, okay, there's a storm outside. We're heading down, exactly how far, how deep, how painful this will be, that is not clear. Many people will tell you it's a health crisis first and then an economic one. But for our founders, one of the things, the first thing in that kind of a situation, and I think this is also drawing from our experience investing, but also in former lives navigating crises, is that the first thing that you need to figure out is, as a founder, is your own psychology, right? It's, okay, what I do, and the first point is, what I do or not do, because not doing anything is doing something, will affect what make or break the company that I run, the company that I founded. And I think it applies for employees, it also applies for us as investors. That's one of the very first things is that, look, this is whether you do nothing. Doing nothing is doing something, and you need to come very quickly to terms with what's going on. The second point is that, look, given that as investors, as a founder, your mindset is historically one of optimism, where your focus is exponential growth. It's that has to shift, right? This, like I said, we're in an elevator that's going down. We don't know where it's going to stop, and it could be worse than you think. I think one of the things that is easy, it's human, to miss are just where the interlinkages are. So, this goes down, A goes down, B goes up, C, what happens to C? And A, not thinking through those linkages, but then also missing variable G that ultimately gets destroyed by the interplay of these things. So some of these linkages and understanding that, look, this thing could be worse than you think it is something that you have to very, very quickly come to deal with. And I think the last point is about, going back to basics. It's and again, for us, it is for our founders and our portfolio companies, but also for us as investors, it's what was our thesis going into this? What were we thinking? What were our ideas? What were our thoughts about how this plays? And then working through, given what is going on in the immediate term, in the short term, in the medium term, the long term, how does the environment change in a way that affects our thesis about what is possible? So, you're starting to see in some countries put out plans for how they reopen. Germany put something out that says, some shops will start opening, some workplaces will start opening, but restaurants, probably not for 18 months. Concerts, we'll look at this in the future. So if you're a business affiliated with those, it's there's a fundamental change in the landscape that you need to come to terms with, and then kind of work forward from that. So if the thesis was supporting entertainment and you had gone at it from concerts, you go back to the original thesis, supporting entertainment. What would entertainment, if I can't, in a world without concerts, what would entertainment look like? And what do I have? What tools do I have to hand from the team, the product, that enables me still stay focused on that mission? So those three things are the key things that we've been engaging our founders on, and I think everything else that needs to be done that the founder does do will come out of those three things. Whether you're laying off people, why are you laying them off? How does it place you for the rebound? Or how do you conserve cash and all of that? All of those come from those three key things about the nature of your psychology as a founder.
Can I just jump in if it's okay? Just a quick thought on that. Completely agree with what Tosin has just said. I think just to extend that a little bit in terms of it's helpful because I'm looking at some of the questions in the chat. You know, I think it is the advice is out there, right? In terms of what the founders can and should be doing to try and do things like extend their cash runways, build out their business scenarios, think about, look, what happens if these things go, if my revenue stays at this depressed level or even worse for the next 3 months, 6 months, what are my capital raising plans? How can I kind of reframe them? What, you know, all that kind of advice is out there. But fundamentally, it comes down to how much cash can you conserve in the business? How long will that keep you running for? And how do you then minimize your expenses and secure the assets that will help you to create, I guess, extended runway, help you to sort of build some of these innovative approaches around the initial thesis, etc.
Interesting. We'll come back to that point. I noticed you mentioned something about like if my business is entertainment, what does that look like in the new world? But there's an interesting point there. If, for instance, entertainment is no longer needed in the new world, right? What does my business then morph into, or what should I do? But I think that's an interesting conversation to have. But I wanted to ask Kola a question.
So,
I know a lot of your portfolio companies. Yeah. You wanted to jump in?
Yeah, I just wanted to say that I think
sorry, I think we lost him. But Kola,
sorry, my bad. Just a quick thought before we jump off that topic. I think one thing that's important to point out, and this may not be very apparent to the macro MBA types, is that the reality of this crisis is that it's wholly dependent on how you react to it. So there's no sector that's really like kind of doomed off the bat, right? People are still watching content on Instagram. There's record numbers in terms of streaming and Instagram Live. So if you're in entertainment, there is an opportunity. What determines whether you survive this crisis or not is not your sector, but how you react to it and how you continue to provide for the needs of your customers. So I don't agree with the point of view that there's any sector that's actually doomed from the start. It's just like, how are you going to adapt your business to the new normal? And that's really what's going to determine whether you succeed or you fail.
Yeah, I agree with you, but I wanted to put it out there to say, hey, what if, like, how do I even assess that my business is, or the trend within my industry on an upward turn or a downturn and things like that, and how do I respond? I think that those are valid questions to ask. But I wanted to ask Kola this question, maybe still in line with this, but I know a lot of your portfolio companies are responding directly to this crisis, for instance, right? And I love what you're doing, even with the COVID challenge. I think it's great. But like, what if my business isn't one of those essential services, right? What can I do? I mean, I got a number of questions about, like, as a laundry business, for instance, right? Or as a fashion business, right? And maybe people are not particularly excited about that right now. And maybe there's no way that I can respond to this crisis right now. I mean, there's no like service that I'm providing to respond to this crisis. What can I do in that sort of scenario?
Great question, Emmanuel. Well, I think, and this sort of also jives with the advice we've shared with our portfolio companies. I think you have to look at this crisis in 3 buckets. You know, the first bucket is the pandemic, the lockdown period. Post the lockdown period, even when movement starts to be relaxed or the restrictions are relaxed, people would be more cautious. And even in months to come, there's forecast of a global recession and in some cases a contraction. The McKinsey report that I think has been referenced lays out 4 different scenarios. And lays out Kenya, South Africa, Nigeria, and I think another major city or country. And in each of the 4 scenarios, it's forecasted, in the best scenario, it's forecasted that the Nigerian economy will contract by -3%. You know, so that tells you that, you know, a lot of people are getting carried away with the lockdown because the lockdown in itself is quite stressful. But as entrepreneurs, you have to look at this crisis in 3 buckets, you know, and the question is, you know, what we are encouraging our portfolio companies to do is you've got to have a plan for each of those 3 buckets, right? How do you care for the well-being of your customers and your employees during the lockdown? What happens post the lockdown? And how does your company fare in the medium to long term? Again, because we don't know how this bottoms out, we don't know what floor that elevator would stop at, it's really tough to sort of to be very precise. Again, humans historically have been known to be very resilient. So I'm not going to go out on a limb and say all of a sudden Nigerians are going to start shopping online and would continue shopping online even after the lockdown is raised. Now, I do think that we are going to see an uptick in because what this lockdown does is it sort of reduces the barrier for customer education and you know, and it's helping adoption. But I don't know that it's going to be a radical shift. I think you're going to see an uptick in adoption in some of these digital platforms and digital tools that people have hitherto been reluctant to utilize. But I think you would be going a little too far to conclude that the events industry is dead. You'll be going too far to conclude. I think what this does is it certainly allows entrepreneurs to carry out experiments and sort of start to build their funnels, right, for what is likely. But I wouldn't completely advise 100% pivot, right? Because a lot of the business models, in fact, for some of our portfolio companies, I mean, Send.ng is one of our portfolio companies that is in the whole, you know, fulfillment and air and sea freight space. I believe E's fund is co-investing in this as well. And their response to COVID isn't quite a pivot. You know, it's what they did anyway, but they essentially created a product that works for COVID. And so, you know, I think it would be careless to completely try to pivot 100% because, you know, the history shows that humans don't change that much. The best description of this crisis that I have seen is that this crisis is not rewriting the course of history. It's merely going to accelerate it. You know, and so I think the focus has to be on staying alive, staying. You know, I think the very basic nuance of checking on your employees, ensuring the well-being of because the hardest thing to manage is actually yourself today. Right? How are your employees dealing with, you know, with themselves mentally before they can even offer services and support customers? And that's sort of how we're looking at it. A number of our portfolio companies like MDAS, like Send, you know, like Gerocare, have been able to create new products that work today, but this doesn't I hope that some of the listeners, they readjust to the now. Thank
you. Nice. That's interesting. And we're going to come to the question you raised earlier, Kola, but to Ian, I know you just launched this product, right? That's trying to, in a sense, turn like venture capital on its head or like democratize it in some ways. What, like for entrepreneurs, right? Is this actually a good time to be raising money? That's one. And even if I were to try to approach an investor right now, what sort of support should I realistically expect from investors during this?
Sure. So, you know, crises are really when you quickly realize who's naked swimming in the tide. Like the tides where you realize who's swimming naked when it comes to the investment community, because there's a lot of portfolio investors out there who are basically MBA students and don't quite understand entrepreneurship in the way that one should. And so as a result, they're not quite the right people necessarily to deploy capital. But unfortunately, because of the structure of venture capital on the continent, they're most of the people who have capital. And so they're more or less likely to kill perfectly good companies or provide bad advice to companies. And so that was a major concern for us in launching our co-investment plan, because we started to see certain decisions that were, in our opinion, completely irrational. and just driven purely by fear. And so it was important for us to have a funding alternative out there that was actually going to protect the interest of entrepreneurs through a very difficult time, while also exploiting the opportunities that this opens for us. And again, like for me, I'm a student of history, so I like to go back to what has happened in crises like this historically, right? 1918 Spanish flu, we got a lot of innovation out of that, right? Including the invention of four-person aircrafts, which really improved a lot of stuff, right? Other kinds of inventions were made at the same time. 2003 SARS crisis, very similar to this. Alibaba and WeChat actually scale tremendously through the leverage of Taobao to enable e-commerce. So some of the greatest companies are built through recessions like this. And it's important that there's capital to support them. Otherwise, you lose to other countries and other nations that are better prepared, right? So that for us was kind of very important, that we come up now to basically try and fill the gap that smart capital can provide, right? So that was my thought. Now, on your question, I think you asked another question about what kind of support. What is it? Should you be raising money now? My advice is yes, absolutely yes. This is actually the time to raise money. If you're a good business, this is the time to raise money, because money is a competitive advantage. It allows you to pick up employees of good employees that have been now put out on the streets. It allows you to invest in innovation. Obviously, this is not the time to raise money and then pursue a reckless growth story, right? It's not the time to invest in marketing per se, right? Maybe sales, but not a lot of marketing. So you have to be very smart about how you spend the money. But definitely, those who have money in times like this will survive and thrive, even through to the good times come back. And it's critical, actually, that innovators receive funding, because innovators are how we get out of this crisis situation. They're historically the people who rebuilt the society and rebuilt our economy. So it's important we have innovators active in this time. In terms of support you can expect, I answered that question on the Q&A, but I'll just power out what I mentioned. I think the first thing is, if your investors have not called you now, and by calling you, I don't mean calling you to say, how's my money doing and all that. I mean, just called you, find out how you're doing, what's up with the business, how they can help. You should probably worry about taking money from them next time, right? Because they're just not doing their job. That's number one. Number two, they should definitely be able to offer some advice on strategy and like helping you think about new markets that your assets and your skill sets can support, right? They should definitely be giving you some time to think about that. Thirdly, they should be able to help you find customers that fit the new profile of business that you've decided to do. Very critical, right? They should be able to support you doing that. And then finally, I mean, different investors are differently resourced, but whether it's in terms of enabling you access to existing funding programs, right? Or showing you other funding programs that exist, or even themselves putting up capital to support you through this time, you should be able to reasonably expect some measure of support on that from investors. So that's what I think entrepreneurs should be expecting from investors at this time.
Right, thanks. Still on the fundraising question, Tosin, what would you write a check? Like, what would make you write a check, like right now as an entrepreneur? And like, what sectors are you sort of looking at right now as like potential industries that you would be looking to invest in?
So at this time, I mean, yes, it's work from home, but it's business continues as unusual, if I can say that. So we continue to evaluate opportunities and our positions to write checks. I think the fundraising question, at least from our standpoint, one of the things that we're seeing, even as we help some of our portfolio companies with capital and introductions for additional capital raises, there's a need for an awareness of what drives an investor's ability to write a check, right? So some of the things that we're seeing is that you're having investors who are open, but their LPs, the source of money, because they're just managing other people's money, have been hit in other places. So you have an LP who has a diversified portfolio of listed securities and all sorts of investments. And on the continent, these LPs tend to be, in some ways, globally diversified, or at least emerging markets diversified. So they're exposed in a whole variety of ways. And also even just for GPs. So one of the first things is to appreciate that investors, there's going to be a focus on triaging existing investments. Now, what that means is that whereas capital that I thought, okay, I'd like to put this into making new investments, perhaps I need to hold a little more for my existing portfolio companies, because they're going to need cash, they're going to need capital to survive this, survive through the storm. So from a GP standpoint, that's one. It's I have to increase what I hold in reserve, because I don't know where this is going. So secondly, it also means then that, so the way funds like us work is we evaluate an opportunity, see an investment we want to make, and we make a call on capital from LPs. Now you're dealing with LPs, like I said, that are globally diversified, taking hits. Those LPs, many of them also have direct investments that they're triaging. So there's some LPs that we've reached out to just to say, oh, this is where we are with our portfolio companies, this is how things are going. And some are just saying, you know what, good to hear from you, let's talk in April. You reach out, good to hear from you, let's talk in May. I have to rush off to see to a portfolio company, urgent portfolio company meeting. So when you get that from an LP, that already gives you an indication of what's going to happen when it's time to call down on capital, right, to invest. And secondly, it also means then that, secondly, you also have a situation where LPs are saying to themselves, my listed portfolio just took a 30% hit, which means that instead of 20% in venture capital, I'm now 30% in venture capital, and I don't want to be 30% in venture capital. On one of our hangouts that you referred to, Emmanuel, earlier, one of the participants was telling us of a situation in a prior crisis where the Harvard Endowment Fund literally ghosted a GP that they're committed to, just because, from an allocation point of view, the need to put their greater portfolio in balance. So there are a whole host of factors that affect investor behavior. Of course, there's fear. There's, what the hell is going on? I don't know what I meant to do. There is that. But even for those who are putting, who say they are and are actually writing checks, what we're seeing is that the cadence is decreasing, is declining, just as a result of many of these factors. Is this the time to raise? I agree with you. Yes, for a business, either an established one or a new opportunity that takes advantage of some of the potential shifts in customer behavior. Absolutely, you need capital, you go for capital. But I think the awareness is important to understand who's the mindset and the state of mind of the guy sitting on the other side of the table.
I'll just let you respond to it. Then I know I'm mindful of time. Yeah. So once you respond to this, I'm going to ask Kola one question and Eloho one question, and then we'll wrap up. But I want to.
Sure. Just to add to that, I think Tosin's point is very apt. Again, as entrepreneurs are facing pressures, funds are also facing pressures, right? And so just being mindful of that as someone trying to fundraise can be very useful. For us at VP, we're deploying some proprietary capital, and so we have some flexibility, and so we're actively investing. And while there is a major focus on supporting existing portfolio companies and triaging them, as Tosin has mentioned, we're actively looking at opportunities that can ride this wave in ways that are quite innovative. But if you can find money, take it, because no one really knows how long this is gonna last for.
Just one more thing on that, actually. Really interesting. I was on a call 2 days ago with someone from TVG, and they were saying how, if you think about even how they're spending their time and how the large sort of funds are spending their time today in terms of doubling down on, or at least spending time supporting the existing portfolio that they have, it's completely sort of turned on its head, even, for example, little metrics like the amount of time that is being spent in IC committees, right, talking about these deals. And so I think having this sort of layer or this access to investors who understand the continent, they're committed to the continent, and they have the flexibility within their portfolio to continue to deploy on the continent is actually that is very, very encouraging for things. Startups, as entrepreneurs, think about where they take their capital from. Lots of points have been raised around thinking about the support they can provide, etc., and the extent to which they can support you through this crisis. I think thinking systematically about that is really important. So systematically from a culture standpoint, from a track record standpoint, from deep pocket standpoint, the extent to which they can continue to support you. But in many ways, this is a time to accumulate as much cash as you can. And if you're a startup that investors are saying, I would still like to invest, and to the extent that you can take that capital, I would strongly.
Yeah, Elo, I'm going to stay with you for a second. Moving the conversation a bit from capital to I as a person, right? So two things. My job could potentially be impacted by this crisis. My employer might lay me off. How do I respond? How do I think of my career as an entrepreneur? That's one. And then two is, as an employee as well, how can I guess, still thinking as an entrepreneur, help my employer through this crisis? What can I do basically to help my employer get through this period? Did you get that, Elo?
I did. I switched off my video because I'm struggling a little bit with bandwidth. But I think I heard your question. An entrepreneur who is, whose startup fails through this crisis, and then an employee, how can I help my employer? Yes. Okay. I think it's a really interesting question to say, how can employees help their employers? Because I think in many ways, this is a crisis that encourages really all of us to sort of think a little bit around what we can do to help and how we can rally around the companies that we work for, our ecosystems, etc. I actually think also, though, that I'm much more compelled by a conversation that says, how should the leaders and the employers be thinking about the responsibility that they have within their employee bases? I think the ways that an employee can help is all kinds of things. You're working from home, try and stay engaged with the team. You're working from home, there are ways of working, etc. Lots of things that are on the mind for your employers, etc. Try and stay engaged as a team member, try and keep people up to date with how you're doing, how you're feeling. But at the same time, I think there is this massive responsibility, much more on the leadership side, around the culture, the way you engage, about the way you think about what happens to your company and the culture that you're building through this crisis, how you think about your resilience, aside from the capital side of things, but how you think about how could you potentially bounce back, depending on the culture that you've been able to galvanize within your team as you go through all of this, right? So I think it's a little bit of give and take. I think the obvious things employees can do is things like be cost conscious, etc. But this is a really hard time for everybody, and I think some sort of empathy and sensitivity both ways around absolutely makes sense. And some of our founders are grappling with questions around, how should I think about my cost space, right? The first line item that a lot of companies think about when you think about cutting costs is employees, right? But how do I sort of through this crisis be a strong leader such that I don't view my employees as one more cost item, but I actually think about creative and compassionate ways in which I can manage costs through other means first. Interestingly, I think I had one founder that said, look, my salary will go to zero before I let a single person single person take a pay cut in my company. And I think that's the kind of leadership that really the imperative of entrepreneurship creates, right? So the employees should do as much as they can, but I think there's a greater responsibility on the other side. With regards to an entrepreneur that startup might have failed, etc., and you're thinking about what you can do here, I think I would say the first thing is just take a step back, take a break, and just take a bit of time to regroup. One of the things I enjoy about the conversation we've been having so far is that I think there's an acknowledgement that this crisis really throws up opportunities to reframe and rethink about the ways in which the companies that are driving the innovation within this ecosystem are potentially addressing the challenges that a crisis like this presents. I tend to agree with Kola. I don't think it's a step up function with regards to what happens to things like e-commerce and online shopping and all of those things in Nigeria today. But I think that some of those trends create opportunities. I think that the way social distancing creates opportunities. And I think perhaps I would encourage that kind of entrepreneur just to take a step back and think a little bit expansively from a sectoral perspective, saying, where are the opportunities? What are the challenges that this recession has thrown up on the consumer side, on the corporate side, and how can I potentially build something that addresses it? At the same time, I think the great thing to I's point about entrepreneurial capacity is that if you're an entrepreneur who has been with a failed startup, or your startup has failed through this crisis, the good news is you bring lots of really valuable experience, right, around the things that you may have done differently. And I would sort of say that experience is critical for the next founder and for the next startup that is navigating its way through this crisis. So perhaps there are opportunities to join another sort of co-founder, another team as a co-founder, for example, and really sort of bring that experience, bring that knowledge, bring that insight into what that team that has managed to sort of sustain itself thus far is trying to do. So I think there are ways to sort of think about this crisis as potentially helping people, gild their loins in many ways, et cetera, et cetera. And that presents opportunities, frankly, on all sides.
Yeah, thank you so much. I know we're almost out of time, so I'm just going to ask Kola for final thoughts, especially around if you want to share, how can I, to Eloho's point, how do I adapt my leadership during this point, right? Especially in a case where I have to lay people off, for instance, or how maybe make pay cuts and things like that. How do I communicate that? And you might just want to share final thoughts around that as well.
Great. I think the key word is candor. Leaders need to be very candid with their teams, need to be very hands-on, even within our own companies, even within Ventures platform. From day one of this crisis, we set up a COVID war room where all our leaders and also of are engaged, and we've been very pragmatic. For all our companies, we jointly created a business continuity and disaster recovery plan, and that document is open source. Everyone sees it. So one of the items on there is like a scenario of what happens if we have to, cut costs, including salaries or headcount, right? And so I think that transparency, when you have to let people go, I don't necessarily think it's something that you do behind the scenes. I think it's a conversation that should be held in the open, and because you'll find that your team members might actually have valuable contributions and ideas themselves. And so I think the biggest thing that we can all do now is be honest, be candid, and allow people bear their mind. Because everyone knows, this crisis took us all by surprise, and so everyone knows what's going on. The worst thing you can do is be sneaky or dishonest about it with your team members, because again, the companies that will thrive are the ones that have treated people well today. Thank you very much.
Any final thoughts from you, Olutosin?
I would say for me, I think what is important for entrepreneurs to remember at this time is that the future is 100% our responsibility. There's no analyst or McKinsey or whatever that can actually tell you with any kind of certainty what the future holds. And so if you make decisions from the point of view that they're right and you're doomed, you're definitely going to be making the wrong decisions, because even they never saw this crisis coming. So how can they possibly tell you what's going to come next? Obviously, the data points are useful, but I would say ignore quite a bit of it. If you have some unique insight into your industry, attempt things, try things out, and remember that the future is 100% your responsibility.
All right. Thank you so much.
I would say to entrepreneurs and investors, the world is not about to end. This is not the end. It's important that you take care of yourself, your own mental state, whatever you need to do. Maybe it's the time to pick up some exercise. Maybe it's the time to reconnect with a group of friends that maybe you ghosted while you're building your business. Just take care of yourself.
I like that.
Yeah, take care of yourself. Eloho, any thoughts? Are you good?
No, no particular final thoughts. I think to be honest, I broadly.
Internet. Am I the only one struggling to see here? Okay. Okay. But I think this is a good place to end this call. I think the most important thing that has been shared on this call is to start with yourself, right? And to make sure that you are okay. And then, so that means looking after your mental health, but then be candid with your team, right? Have like candid conversations with your team, be empathetic with it. And then from there, you can start to see like what opportunities, maybe your employees could even have like interesting suggestions for you on how you can adapt. And I think that that's a good way to end this conversation. And if you do need to raise funds, like by all means, if anyone is willing to invest at this time, by all means, go ahead and raise the capital and like take advantage of opportunities that you're able to access. With that, I think that is a good place to end this call. Just a quick reminder that the Urban Innovation Challenge is open from now basically till the end of May. And really the theme is on shaping the Lagos of tomorrow. And we're really focusing on what the future of Lagos could look like when all of this blows out, right? So what does a post-COVID-19 future look like for Lagos? And how is your solution making the city better for everyone, including those in slums and informal settlements? And we're looking at themes from energy to water, mobility, real estate, basically anything that makes city life better for people. And there are a number of interesting benefits that you can find on the website, from our virtual accelerator program that we're designing, to curated access to equity funding opportunities, $10,000 minimum AWS Activate credits, workspace voucher from Lagos Innovate, connections to like government agencies that you need to scale, and a bunch of things like that. So please check the website. It's urbanchallenge.co/apply. On that note, I think that this is a good place to end this call. I'm really excited that everyone stayed till the end of this call, but we're recording with everyone after this call. Have a great weekend. Thank you very much to all our panelists, Tosin, Eloho, Kola. I'm really grateful. Thank you.
Thank you. Have a good weekend.
Yeah, you too. Bye.